Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news the reflation trade regained some momentum today, and that's getting the attention of equity markets. But first, there is another non-farm payrolls report out tomorrow night, New Zealand time, and the precursor ADP employment report was released today, suggesting it will be a lacklustre affair. The ADP report came in with a much smaller jobs gain than analysts expected, and much smaller than for January. Only 117,000 more jobs were reported in this advanced report. Analysts are currently expecting the US non-farm payrolls to grow by a tepid 180,000 in February, after a very weak 49,000 in January. In any case, for a labour market as large as the US, these general levels are close to a stall. There were two Services PMI surveys out overnight. The internationally benchmarked one for the US reported a strong expansion in February and a slightly better level than for January. The financial and healthcare sectors are leading the way. But the widely watched local one wasn't as positive, reporting a notable pullback. This one said it saw a sharp pullback in new orders in February. In China, the Caixin Services PMI is showing the same limp expansion that their factory sector is experiencing. The steam has gone out of the Chinese economy and it is growing at a rather modest level now, quite a come down from the 2020 COVID bounce back. And in Hong Kong, retail sales remain in a severe tailspin, down 13.6% in January compared to the same month in 2020. And you may recall back then, they were down 21% too, and with the Wuhan virus crisis and protests biting together. So from January 2019, their retail sales have shrunk almost 1/3. That is a truly massive reduction. The US Treasury 10-year yield is back up 5 basis points today at 1.47% and extending the yo-yoing pattern of the past few days. And the price of gold starts today lower by $17 from yesterday at $1,718 an ounce, still languishing at a 9-month low. And oil prices are marginally firmer at $61.50 a barrel in the US, while the international price is just on $64 a barrel. And the Kiwi dollar opens today at 72.6 US cents and slightly lower than this time yesterday. Against the Australian dollar, we're lower too at 93 Australian cents, and against the euro, we're little changed at 60.2 euro cents. That means our trade-weighted index is back to 74.1. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.